Fed Chairman Jay Powell and Treasury Secretary Janet Yellen will testify again today, this time to the Senate Banking Committee. Steve Liesman has followed all the testimony from yesterday and joins us now with more. Steve, with what to expect.
Good morning, Michael. The monetary and fiscal duet of Powell and Yellen bring their show to the Senate today. They're expected to sing pretty much from the same songbook again. The question is whether they get a similar reception from this particular audience. Here's the set list from Powell and Yellen. 1, economy's improving. 2, still a long way to go. 3, massive fiscal and monetary stimulus has been needed. And they close the set with inflation will be temporary. On inflation, Powell was asked directly yesterday about the impact of the $1.9 trillion stimulus bill. He responded that while he sees prices rising, he does not forecast it will create sustained inflation.
Our best view is that the effect on inflation will be neither particularly large nor persistent. And part of that just is that we've been living in a world of strong disinflationary pressures around the world, really, for a quarter of a century.
Yellen said she sees the full employment perhaps by next year, also making clear the Biden administration will likely be looking to raise taxes with the next spending package they propose. And she specifically mentioned corporate income taxes.
The stimulus package, the American Rescue Plan, was not funded with any increases in taxes, but a longer-term plan that addresses critical needs of this economy probably would be accompanied by some revenue raisers.
The duo received relatively muted criticism on the issues of inflation, debts, and deficits, especially when compared to, say, the pushback the Fed received from its policies during and after the financial crisis. So for the moment, it looks like the Fed can hold the line on plans to continue very easy monetary policies without the pressure of concerted political opposition. But we'll see if that holds true in the Senate today, Michael.
Yeah, Steve, on that question that Secretary Yellen was answering about the possibility of tax increases down the road, it's an interesting contrast with the general tone from both Powell and Yellen of saying, look, we have to kind of take out all the stops, be massively stimulative, try to accommodate this economic comeback. At the same time, there's just a lot less, evident cost at this point to having these massive deficit financed stimulus packages. So the question of why are we raising relatively small amounts of revenue at this moment is a relevant one, I think, in terms of what the overall policy and principle behind it are.
I think you may have hit on it with that last bit of your question there, Michael. And I'm indebted a little bit to Stephanie Dew from our Washington bureau producer down there, who did write me a note about this when we were discussing it yesterday. She says that the Democrats, they want to raise taxes in part to pay for some of their programs, but also as a matter of policy, Michael. This is part of what they think the way the world ought to work, both redistribution and having taxes that are at a certain level for certain groups of people. One of the things that Yellen said she's going to be doing is she's meeting with other finance ministers from developed nations and talking within the OECD about preventing this race to the bottom on corporate taxes, which is some kind of, I don't know what you want to call it, but détente, where each country lowers their corporate income taxes to gain the headquarters of different companies. So that's also going on. They feel like there ought to be a certain level of taxation for corporations, a certain level of taxations for wealthy people, and they want to do it both to raise money, but also as a matter of what they believe is the right policy.
Shepard Smith here. Thanks for watching CNBC on YouTube.